Bill here with the Metals Minute. Today is Monday, June 27th, 2022. Well, we have silver and palladium up a little bit this morning. Gold and platinum are down a couple bucks, but pretty well the metals are holding their own. We have the overall markets lower this morning so far. There's a report that's come out of Bloomberg about Russia defaulting on their debts for the first time since 1918. And what we have to keep in mind is that this is a manufactured default. They have the funds, they're sitting right there. They have very low amount of debt. It's just that due to sanctions, they're not allowing those funds to come out. Now, keep in mind that it's Americans holding that $100 million, whatever it happens to be, and there's more that's coming due as time goes on. And it's American pension funds, American mutual funds, American investors that own a lot of those securities that our own government is not allowing payment to come due to sanctions. So that's one thing going on. We also see over the weekend they've announced a new sanction on gold coming out of Russia. So keep in mind what happened whenever they sanctioned Russian oil. Well, it caused the price of oil to go up in the West. So now they're sanctioning, they've also sanctioned natural gas. What happened? Price goes up. Now people in Europe are scrambling for coal just to try to provide power and heat for the coming fall and winter. So I don't know if it'll have the same effect, but sometimes we might prepare ourselves. I don't know if it's always the desired effect whenever they make these policy changes, and this is a similar one. Not taking Russian gold, well, that will reduce the supply of gold available in the marketplace. Russia is one of the main providers of producers of gold in the economy today. But what may happen is a similar thing. There's a plenteous market in Asia and India for all things Russia. So it may serve to just raise the price for us here, and that's okay. I would recommend you trying to get more precious metals in your portfolio, what you can, while the prices are down. Because if the same effect of the sanctions happens on gold as has happened with energy and other commodities, we may be in for a bump. Some have speculated that one of the last remaining cards that we have to play in the United States Treasury is revaluing our gold to try to have that be a positive asset class in our mix. And so they may be willing to let the price of gold rise now. We'll soon see if that's part of the plan. In other news, we have on the car front. A lot of times what happens in automobiles is a precursor to what's happening in the economy. And auto market analysts are pointing out that there's a building inventory of unsold used cars that are being accumulated on lots. Many of them have gone through the auction and they didn't sell because the reserve was too high. Dealers have paid too much for them and they're not letting them go. The repo market is also booming right now with some of the tow truck operators really doing well right now, and the repo companies. And so a lot of that inventory is building up. The banks are not letting all those cars go through at once. They're trickling them out, making it appear that there's still a shortage of cars. But analysts are telling us there's no shortage. It's building up, and they expect within 2 to 3 months, due to the slowing economy, due to repossessions, due to people not being able to pay for the automobiles, sometimes even after the first or second payment, there's likely going to be a flood of cars in the next 2 to 3 months. And so that's an indicator of the economy is really beginning to slow. things aren't as rosy as some of the pictures we've been led to believe. So keep these things in mind, and remember, with all the shenanigans going on, it's good to have some precious metals in our portfolios just to help keep everything stable as this world continues with a lot of uncertainty in many markets. And so precious metals are still leading the way this year as the leading asset category. Thanks a lot. We'll talk to you again soon.